Hello everyone, I'm Chris Kapches, President of Chestnut Park Real Estate, and today I'm going to give you the January market report for Toronto and the Toronto region. Unfortunately, I'm going to start with bad news, but I'm going to complete this report with excellent news. The bad news is January is basically a continuation of the declining market that we witnessed throughout 2022, starting basically around April, maybe March of last year, as the mortgage interest rates started rising, average sale prices started falling, and of course sales volume fell with it as well. And the absolute numbers for January are no different. The sales were off by almost 45% compared to January of last year. Average sale price came down to $1,038,000. That's a decline of almost 16.5% compared to last year at this time. And just as a comment about where the market is continuing to go, certainly over the next 2 or 3 months, comparing what happens in February and in March and perhaps even in April, comparatively to last year, we're going to have continuing negative variances. Definitely in the case of sales and perhaps in the case of average sale prices. But beyond that period, I'm very confident that that will change and that going forward we'll actually start seeing some positive variances, particularly after April. And I'll tell you about that in a moment. But first, let's look at some of the numbers in the January report. And even in the January report, where, as I've just mentioned, there are some very negative numbers, there's also some positive stuff that is indicating on a forward-looking basis that perhaps this economic cycle that we've been going through starting in March and April of 2022 is basically coming to an end, or at least plateauing as we move into the early months of 2023. As I said, the sales were down, average sale price was down, consistent with what was happening through the fall months and then into December. Days on market's up. But one of the things that is concerning is the number of new listings that came to market in January. It was almost 4% fewer than the new listings that came to market in January of 2022. The reason that's concerning is that if we're right about where the market is going to go over the next couple of months, the supply issue is going to become crucial, because if more properties don't come on the market, the demand, which is super strong out there, is going to overwhelm the market, and we're going to get into a jam whereby even those buyers that, one, can afford the properties that are on the market, and two, that have the desire to buy them, are going to be precluded because there's going to be not enough selection for them. So that's a concern going forward unless we get more supply. What this is indicating, though, is that the sellers are not throwing their properties on the market. There's no fire sales going on out there, which is an indication of the strength of the market and the belief in sellers that this market will ultimately change, which I believe it is changing almost as we speak. And again, I'll explain that in a little while. What's contained in the market report that is starting to point to change is the sales of detached and semi-detached properties in Toronto. In the case of detached properties, all detached properties in Toronto, albeit prices have come down fairly substantially since the height of the market in February and March of 2022, but they all sold for 100% of their asking price. And that's the first time we've seen that in a number of months. And not only did they sell for 100% of their asking price, but they did that in 22 days. The overall number of days it took for properties to sell on the market was 29. But here we see detached property selling relatively quickly. So the slowdown in the market in terms of days on market is really coming from the condominium sector. Semi-detached properties are even more outstanding in that all semi-detached properties sold throughout the marketplace for 102% of their asking price in the city of Toronto. And if we go to the eastern districts that have been very favorable over the last few years, we see that all properties sold for 103% of their asking price, and they did that in only 18 days. Separate and apart from all the other economic factors that are at play right now, if I gave you those numbers that all properties sold for 103% of their asking in 18 days, you would say we are in a robust market. That is an indication of where we're headed, primarily because of the demand and the lack of supply. And as affordability becomes a little bit more bearable, and it is because interest rates have already started coming down, you can get 5-year rates now for under 5%, we're going to see the market start to pick up. But I have other information that indicates that the market is beginning to pick up. We have information, which you're going to see on your screen now, that shows what's happened to the number of showings that are taking place on a daily basis in the Greater Toronto Area, as well as the number of offers that are being registered. And if you look at these charts, you will see that the number of showings that are taking place since primarily the middle part of January, as we got to the point where the Bank of Canada made its last announcement, increasing rates by only 0.25%. Now we're at 4.5% overall, but indicating that that may be the last increase we're going to see for a while. All of a sudden, the number of showings skyrocketed. More importantly, on the next chart that you're going to see, you'll see that the number of offers that are being registered also has increased dramatically. That combination is a forerunner of what's going to happen to the market as we move forward. More people are in the market, more people are seeing properties, and more people are offering on those properties. If we have a problem, it's that we don't have enough supply. So I'm fairly certain that by the time I do the February market report, we're going to see even more improvement. And I'm hopeful that what you're seeing in the charts is an indication that the market is moving in a very favorable way. And overall, why is that the case? Well, it's the case because average sale prices have come down almost by 22% compared to where they were in February. There's a sense of stability as far as the bank rate is concerned, with a view to the bank rate maybe even coming down as we move forward. And on top of that, we're starting to see, based on the number of showings that are taking place, is that buyers are finally off their kind of inertia. They're moving back into the market, and we're starting to see the market slowly start to pick up again. So until we do the February report, please stay well, and I look forward to providing it to you next month. Thank you.